What's up, you guys? Welcome back to the channel. In today's video, I'm going to go over if NIO stock is going to recover from this sell-off, and if so, how long it's going to take them. But before we actually get into all the information, for those of you who are new here, my name is Evan, and I make videos that show you guys different ways of making money in the stock market. So if that interests you guys, make sure you subscribe and hit the notification bell so you never miss when I upload. Also, while you guys are down there, if you wouldn't mind hitting the like button, I would really appreciate it, and it lets me know that you guys enjoy these video updates every day. Now, to give you guys an update of where NIO's trading as of right now, they're down 0.5%, and they're trading right around 43.14 at this current time. But on the weekly chart, they've actually been trading relatively flat, even though they're down about 4% right now. You can see most of the week it's been very flat. There's not been a lot of ups and downs throughout the last week of trading. And then on the 1 month chart, NIO's still down about 6%, and their high this past month was about $53. And so they have dropped about 20% from that high a couple weeks ago, and it's been this constant downwards trend. And I'm sure a lot of people are wondering when NIO is going to stop this sell-off and when they're going to continue going back up, like we were seeing previous to these last couple weeks of trading. And actually, compared to the S&P 500, which was only down about 1%, NIO is down quite a substantial amount. And this sell-off comes partly due to increasing pressure on US regulators to implement the Holding Foreign Companies Accountable Act passed last year. And this could result in the delisting of some Chinese companies from US exchanges that don't actually comply with the US auditing rules. Now, on a separate note, China's top technology companies, including Alibaba and Didi Global, have also come under some great scrutiny because domestic regulators are thinking that they're not compliant. And because of this, it's also impacting NIO and some other EV stocks that we're seeing like XPeng and Li Auto. So are these declines going to continue for NIO and other EV stocks, or is a rally looking more likely? Well, according to some data which analyzes historical price information, NIO stock has a 52% chance of a rise over the next month. But the longer term outlook for NIO is also looking a lot better. We know that the worst of the automotive semiconductor shortage is in the past, and this did end up constraining production over Q2. But now that it appears to be over, one of the world's largest semiconductor makers, which is Taiwan's TSMC, is indicating that they're going to ramp up production considerably in Q3. This would enable NIO to ramp up their production more smoothly, and volume growth is also likely to remain very robust, driven by the company's overseas expansion plans and their continued growth in the Chinese market. Because even though NIO plans to expand globally, and they're planning to expand to Norway this September, they really haven't taken over much of the Chinese market because it's a huge market in China. It's actually the biggest market in terms of vehicle sales anywhere in the world. And we know that Tesla is currently dominating that space, but from the looks of it, it seems as though the Chinese government would rather have NIO taking over that space rather than a foreign company like Tesla. And also, sales of new energy vehicles, which does include EVs, hybrids, and hydrogen vehicles, are actually expected to grow by over 40% each year in the next 5 years based on the China Association of Automobile Manufacturers. And I don't know if you guys follow the short interest on different stocks, but NIO's short interest has actually been declining over the past few weeks. According to the latest data, it reveals that short interest in NIO shares has actually dropped to its multi-quarter lows, and it's currently down to minuscule levels. This basically indicates that the market participants aren't buying into these bearish narratives and that they're actually hesitant in shorting NIO stock. So that should give you a good idea of where NIO's trading and where they're going to be in the near future if a lot of hedge funds and a lot of big players in the stock market aren't willing to short NIO stock. And most of the time, the bigger people in the stock market know insider information, and they know things that the average investor can't get a hold of. Now, if you guys aren't sure exactly what short interest is, I'll give you a quick overview, and it's essentially the total number of short positions that are open but are yet to be covered in any given stock. A sharp rise in this figure actually indicates that market participants actively initiated short positions in the concerned stock, and this is perhaps because they anticipate it to rapidly depreciate in value going forward. And conversely, a sharp drop in this metric suggests that market participants actively wound up their short positions in the concerned stock, perhaps because they anticipate it to remain range-bound or rally going forward. So the short interest metric is a very useful tool to gauge the street's ever-evolving sentiment pertaining to any given stock. And going back to NIO, their short interest actually stood at 62.35 million at the end of the last cycle. And while this figure may seem huge in isolation, it amounts to a small 3.8% of the company's entire share total. Now, while there isn't really a universal rule around short interest, Normally you could consider any short interest figure below 15% to be relatively low, and that's 15% of the company's entire share total. But overall, NIO share interest is actually down 11% month over month, and they're down 70% from their 2-year highs. So this definitely suggests that market participants aren't as enthusiastic about shorting NIO as they used to be. And just for the record, the latest short cycle actually spanned from mid-June to the end of June, and the data was released less than a week ago. And there also aren't any indications of an industry-wide short unwinding, where short interest in some companies actually rose month over month. Some other companies saw a decline in their respective figures, but it's pretty obvious when you compare NIO to other companies that their short interest actually dropped faster than the industry average and the median. So again, this suggests that market participants are really getting out of shorting NIO, and they're no longer trying to short NIO. And instead of shorting NIO, they're finding other automotive companies to be shorting. Now, I'm sure you guys are maybe wondering why there's not many people shorting NIO right now, especially considering there's so many bearish narratives surrounding the company. Well, for starters, NIO's actually registered triple-digit growth in deliveries for the 4th consecutive quarter. And this alone is pretty impressive. And actually, during quarter 1 itself, the company delivered a little over 20,000 vehicles, which marked a year-on-year growth of a massive 423%. Also, NIO's pace of delivery growth was much faster than Tesla and Li Auto's during that same quarter. And looking forward, NIO's deliveries could continue growing at very elevated rates, because NIO has a smaller base effect working to its advantage. In other words, a company like Tesla is certainly more established in the industry, but it'd be incredibly difficult for them to match NIO's pace of growth, because NIO is still in their early stages as compared to Tesla. They can still grow at rapid rates, where Tesla really can't do that nearly as quickly. NIO also started deliveries of the EC6 model in very meaningful numbers only in quarter 4 of 2020. This means that NIO's upcoming Q3 of 2021 is going to have a lower base effect, and their delivery growth rates could stay very elevated. And then they're also going to begin selling the ES8 model in Norway this September. And this is actually the world's 6th largest market for electric vehicles, and it could quickly become a key growth driver for the company, especially if they end up playing their cards right. And also, one other thing to keep in mind is that the deliveries for NIO's recently unveiled smart electric sedan, the ET7, are expected to start in 2022. So this really could further contribute to NIO's delivery growth in the coming quarters. And I'm sure for any of you who are investing in NIO, you've probably dealt with a lot of bearish people in the past. And there's constantly commenters arguing that NIO shares are very overvalued and that they're due for a correction. And it would make sense when people are saying this, because the stock is trading at almost 20 times their trailing 12-month sales. And this is vastly higher as compared to a company like Ford, who's at 0.4 times their sales, or GM at 0.7 times. So this skepticism is very understandable. But valuing high growth companies like NIO, Tesla, or other EV companies usually involves a lot more than just comparing valuation ratios. Now, I do want to mention that things we went over, like the short interest numbers, these don't always impact the underlying stock prices. But having said that, the continued short unwinding in NIO shares is counterintuitive. If NIO shares were due for a sharp correction, or if there was indeed a legitimate bear case against this company, market participants would have actively initiated short bets against the stock in order to profit from the near certain event. But because this didn't happen and their short interest declined instead, it does give you more of a bullish mindset, especially if you're investing in NIO. I don't think large hedge funds and large people in the stock market would avoid shorting NIO unless they thought that maybe long-term NIO is going to continue rising. And I think that's definitely the case that we're seeing right now, and with less people actively shorting NIO. It basically solidifies the thought that people aren't buying into the bearish narratives that are maybe floating around various investing forums or even on YouTube here. And so I do think this should come as somewhat of a relief and more of an encouraging sign for long-term investors and shareholders. And the only thing I can tell you guys, even though I'm not a financial advisor, personally what I would be doing is buying more shares of NIO and bringing down my average share cost. Now, I know a lot of you guys have been buying into NIO way before they were trading above $40. And I'm sure a lot of you guys have average share costs in the $10 and $20 range. And so for those people, maybe you don't want to be buying shares, especially if it's going to be a bumpy ride over the next few months to the next years even. But for the people who've maybe bought in at the top above $60 or even above $50, buying in now where NIO's trading about $40 to $43 might not be a bad time to add shares to your portfolio. But like I've mentioned in the past, I don't receive anything for promoting NIO stock. I just share this stock with you guys because I know a lot of you guys are interested in NIO stock for one. And I also do think it's a very good stock long term, so long as they keep up with investor expectations and as long as they keep hitting their numbers consecutively. As long as that happens, I think NIO is going to be a good competitor in the EV space for a long time to come. Now, for those of you who made it this far into the video, I know I haven't asked you guys in a long time, but I want to know what your guys' average share cost is and how many shares you own down in the comments if you guys are comfortable sharing that. And if you guys enjoyed the video, make sure you leave a like because it really does help out the channel. Also, don't forget to sign up for Webull if you haven't already because you'll get 2 free stocks when you sign up and deposit $100. And with that said, thank you guys so much for watching, and I'll see you back here in the next one. Bye.